All right, welcome everybody. Back to our Maddox Market Musings. Thanks for joining Roy and I again this evening. We're going to talk a lot about the changing market. Obviously, in the last 4 or 5 days, what's changed, and really, I was debating if I should just call this the changing market character because clearly there's been a significant change in character in the market. But I went with getting back on the horse, and just in case, people are I feel like it's a good theme for the evening, right? We got through this correction. It looks like the worst is behind us. It was a nasty pullback with a lot of different things under the surface, a lot of different landmines, ways you can get hurt, and especially in the choppiness, where the trend really oscillated for several months about whether it was up or down. So, if you're still with us today, you most likely made it through what Roy and I thought was maybe one of the hardest trading environments we've seen in years, because, we know that we're good at sitting out on the sidelines and in downtrends, but with the market kind of toying with us for 6 months, it was rather difficult. So, congratulations, you guys have stuck through it. You're still here. There's plenty more to come. This game really never ends. So, hopefully you guys are optimistic and you remain optimistic. And we're going to go through, the things that we saw kind of go. We'll walk through that pullback a little bit, the different indicators that we were monitoring on sentiment and breadth that were kind of helping us get clues about when we might be bottoming and whether that was enough. And then we're going to walk through step by step what we did, and sort of the narrative of the change in market and putting in the bottom and the follow through day and what we added over the course of the last few days. So we think it'll be really valuable just to see exactly how we navigated it. We think we did a decent job, and we just were talking prior to this, learning from prior corrections, prior bear markets, and trying to improve upon that. We think we did an okay job improving with this last follow through day and execution there. So we'll go through that, and hopefully you guys find this helpful and informative. So what we're about. We were a Charlotte-based Investors Business Daily meetup group where we used to meet in person, but now we're international. Most people in the U.S., but we reach a lot of people now through this YouTube channel, and we focus on these ideas that are grounded in How to Make Money in Stocks by William O'Neill. That was a big influence for Roy's career, and then obviously his legacy continues to influence people in my generation and even younger. So a lot of what we talk about is based on those key ideas that he outlined in his book. And for disclaimers, of course, we're not making any investment recommendations to you. Do your own research, make your own decisions, talk to a financial planner if you are looking for that. But these are not recommendations by any means. So one of the key ideas in William O'Neill's book was this CAN SLIM acronym. He tried to boil it down to something catchy and simple. And what he saw were these key ideas, these key 7 criteria that he looked at for selecting the next market leaders. So he'd look for, big earnings growth, quarterly and annual earnings growth, new companies that were designing, new things and changing how we live, work, and play. He would look for volume because, we always say it's not Aunt Susie that's buying when you see a lot of volume. It's the institutions that are piling in. So that's a clue they can't hide when they're piling into a new idea. And then leaders versus laggards. A lot of people, for example, this is pretty apt right now. A lot of people want to call the bottom in IGV, and there's certainly a place for calling the bottom, and it might be a decent trade buying things like software here. But it's not really what you want. You can play these things for bounces a lot of times, but Roy and I, we say we're looking for things that are in the top right hand corner of their charts. They're the first things to break out on the follow through day. A couple of these we'll even talk about that maybe broke out prior to follow through days, and we're certainly showing their strength prior to the follow through day, given their their tendency to bounce violently towards their highs while the market was making new lows. Market direction, that's really a big focus for us too. Most stocks just follow the overall direction of the market. So, um, we spend time on that. We pay attention to the indexes because, while it's nice to see stocks buck the trend, you're just not going to have the same amount of success on the long side if the market's in a downtrend. It's just harder to find those. It's just harder to find those stocks that stand out because there are much fewer of them, and ultimately, will struggle and may have the weight of the market ultimately bear down on them. So, market direction is super important, we think, in our analysis. And with that Can Slim, we've adopted sort of three pillars that we like to talk about for our investment process. So technical analysis, fundamental analysis, and macroeconomic analysis. And I tend to think these are really that's the order of the importance, I think, too. And technical analysis that focuses on price action and trend. We're trend followers, so that's really what we're trying to do. We're trying to miss the bulk of the downside and catch the bulk of the upside. So we'll talk about what we saw in the trend and how that changed with the follow through day. Last week. Other things we'll talk about, breadth and sentiment. Those come into play a lot more for us when we're at extremes, right? So, when the market was in that correction and maybe the S&P was down 10% and the NASDAQ was down like 13 or 14%. That's when we're keying off some of those indicators when they're at extreme levels. So we'll go through a few of those as well. Fundamental analysis, again, a lot of it's boiled down to that Can Slim acronym. There are some other things that we like to look at. Investors Business Daily and Market Surge, they do boil down a lot of things. Simply, there's just they do a good job summarizing the important things here. And of course, you can do a lot more fundamental analysis on your own, whether that's digging into financials or understanding just the new product and thesis a little bit more. That's a lot of the other fundamentals that matter also. In macro, so we do subscribe to Hedgeye. It helps keep us informed. They're numbers based. They're just trying to figure out the rate of change of growth and inflation, and it's sort of the last, I guess, pillar of ours because we know what the narrative is out there in the macro world. We know oil is up. We know inflation is going to be up because of the oil shock. We know that has its risk of staying elevated and eating into the consumer's spending power, right? Or purchasing power. We understand that, but when the stocks stop or when they start ignoring the macro, we're certainly going to listen to the stocks, and we saw that. We saw it happen, very clearly last week that the market does not care about oil anymore, or at least the market is seeing a resolution, through all the noise and all the negotiations. So here's a chart that we look at, just the cues, and it's annotated for sort of meaningful things, meaningful events throughout the last year or so. So I highlighted some things, where we first struck Iran and oil prices were breaking out. That was right here. And then, with that, we were in this kind of steady downtrend, and the exact inverse of this chart is oil prices throughout that time period. We were oversold, had a bounce, and then we had this notable Thursday before Good Friday. Oil was spiking, and then we actually closed flat. So we had a really weak open and closed flat. This is the day where Trump tweeted, "A whole civilization will die tonight." Extreme rhetoric, gapped down again, and closed at the highs of the day, just turned green. So clearly some hints in the market right there that things were improving behind the scenes. And then here's where that follow through day happened, and that was after the ceasefire was announced for 14 days. So just a little annotation there, and we'll go into more detail on those sort of events in a little bit about what we were doing there. And just like I said, the inverse of the S&P or the Qs was this oil chart. So oil broke out, and with that, that put pressure on the market overall. So this is the USO, the ETF for oil, and it's something that we're keying off of still. But it was interesting when the market did stop ignoring it. It's still very elevated. We understand that absolutely, but you can sit here and wait for oil to come down, or you can follow the stocks and get long. And hopefully you guys were able to pivot quickly with the kind of ridiculously strong stock market action. Here's some sentiment things we were looking at. We never know how extreme they're going to go, but this is the National Association of Active Investment Management. So these indicators down here are this is it's a survey where they ask, how long are you if you're an active manager? How invested are you? Well, that hit about 60%, relatively low, not the lowest we've seen. Clearly, down here, we hit in 35% in the tariff bear market. Back in November 2023, we hit, 30%. And then this, awful bear market, several times we revisited this sort of 20% level. But we've had corrections like this before. March 2024, that was when we actually had, I think, the banking crisis, where some regional banks went under. Also a really, nasty correction. Even though it looks so short-lived and we bounced back, quickly to highs. That only came down to 60%. This correction from the Japan yen carry trade unwind, supposedly right here, nasty correction. We got down to 60%. So it's fine. It's always nice to see it go lower, just for a better washout, if you will. But we've seen this before, and we were kind of trying to just monitor this to see if it would get even more extreme. Here's another, sentiment index, the fear greed CNN index, sitting here at neutral now. But here's the timeline of that, and so back at April, I don't know, 2nd or something, we were down here, and this is in that extreme fear level. So we were hitting that extreme fear level. I think we hit like 17 or 18 on that fear gauge at the lows there. So, extreme fear, that's certainly in the realm of extreme, right? The put call, I highlighted all these various spikes north of 1.15. And we did not get there, certainly did not get there here in this last correction. But we hit just a little north of 1, and since then we've been coming down. Since then we've been coming down. So, the worst is behind us. It appears still, and looks like Mr. Swanson there, Bill Swanson, he's saying that he saw the CNN gauge down as low as 13, right? So that's very, very low. Here's the bull bear sentiment survey. So when you have percentage of bulls, or a percentage of bears from that survey was north of 50% for a bit. Percentage of bulls right here was just about 50%, which is not really a problem, to be honest, because when you're in these uptrends, you will routinely be close to 50% for the bulls. But bearishness did peak or did spike to like 52% or something right there, and that's a pretty good level. That's a healthy correction level on that survey. Meanwhile, the VIX, something we pay attention to, north of 30 is often enough. You never know if it's going to go, further to this side. You see a number of spikes that are much higher, maybe a 60, and the tariff spikes. But since then, volatility has collapsed. I drew this 20 line, just to, show the point that when you're below this level 20, um, that's what we call the investable bucket, and that's from Hedgeye, and uh, it is a much easier stock purchasing environment where you start buying dips. So that is something that we're going to keep an eye on. Living below 20, that becomes a much easier stock market environment. Okay, here's a little indicator, the percentage of stocks above their 20-day. And this is, so the level down here in the 20s was rather washed out, right? You can see historically how, that's a pretty good level that we hit as far as oversold, and then we did get that bounce right there. And since then we've gone up, straight up. We're at 69 here on that percentage, and that does happen out of these bear markets. It's very common to go from oversold to overbought quickly. And I circled this number, just wondering, is this where we're at? Today we're here. Does that it does look similar, to this sort of level in early May off the tariff low. So maybe that's where we're at. Maybe we deserve some digestion here. We're almost at all-time highs, which is crazy to think. Which would be a very normal spot to take a break and digest some of these gains. So keep that in mind. We're sort of overbought on this short-term indicator. We're getting to that bit extended level. So keep that in mind. We want to be very careful with purchases in the near term. And with that, supporting that, we see this overbought reading in the McClellan oscillator. This is an oscillator we follow closely. We were very oversold, and then again, out of that correction, very overbought. The difference in the market here is that a lot of times if you stay overbought for some period of time. We've seen that a number of times out of these corrections as well. And then the same thing with the NASDAQ McClellan oscillator. This is the NASDAQ, where the other was the New York Stock Exchange. Similar thing, not as oversold actually, but we are up here now for several days in this overbought reading. So again, that's why Roy and I have hardly made any purchases over the last several days, or over the last 2 days. We've dipped. We've been very selective because things got overbought so quickly. Okay, and now I'm going to try to walk you guys through what we saw in real time and how we got invested, and hopefully this is informative. We know we're not perfect by any means, but I look back at it and I'm pleased so far with where we're at in that. So this, not to relive this, but we did exit here, which was a great exit. But this is what gave us the most headaches. This up and down, up and down, up and down, above the 50, below the 50, is really, that's where we struggle. That's where all trend followers struggle the most. We made an all-time high here, and then anyway, so that's all just very, very difficult trading for several months. When we broke the 50 and started living below the 50, that's when it became a little bit more clear. That we were in this downtrend, and the 50-day was turning down, and all these trend lines that we followed were turning down. Now you could have chopped yourself up still, even if you were trying, right? You gap down and close at the highs, gap down, close at the highs, gap down, close at the highs, over and over and over again. But nonetheless, we stayed out. Who knows? Probably here-ish or whatever. We were staying out and like fully in cash, but we had some nasty distribution days with the Iran things, tensions brewing, and we ultimately, were getting oversold on that. These breadth indicators, these sentiment indicators were at a place that they could bounce. Individual stocks were really washed out. I know we were looking at some things like memory stocks, for example, like Micron, which is now maybe a potential leader, ended up having like a 10% down day, and SanDisk was having a 10% down day, and Lumentum, and those were having really nasty days. And then we got the first oversold bounce day, and it was all those prior leaders that bounced the hardest. The second day of this rally, I have a couple of little tweets in here that we'll talk about, but 7 a.m. is when like I think Trump tweets this, and he says, look, Iran's new regime president, all this, and says he wants a ceasefire. We will consider it, yada yada. It's just a rumor at this point, and he's tweeting things, but the market's rallying. It's been 2 days. It's hitting the 21 day. In real time, you're thinking, okay, is that as far as the rally's going to go? Is it just a bounce? We have no idea, right? We have no idea. But in real time, it's not exactly where you're buying. You're not buying on day two. This is a massive 5-6% rally from the lows, and you're going into resistance potentially right there. So tough to know in real time. We gapped down really really far on this Thursday. This was actually the Thursday before Good Friday. On Twitter, there was the widespread narrative that no one wants to hold risk over the weekend. And I remember thinking, I don't want to hold risk on the short side over the weekend either, right? Because there's all these rumors. So it was kind of like, to me, it was a double-sided issue, right? But nonetheless, the gap down was like 2% in the morning. Things like Lumentum, right, and SanDisk and whatever were showing down 5-7%. I don't know, and within like 15 minutes, all of those stocks had reversed and gone green that day. So we gapped down 2% in the indexes. Leaders rallied sharply in the first 15 minutes, and we closed very strong over the weekend when supposedly no one wanted to hold risk over the weekend, especially a long weekend. So a bit, the first sign to me of like, hey, that's a real expectation breaker. A big deal. I pay attention. I'm not going to stay, or at least have to be moderately less bearish, even though the trend is still down technically. That's definitely a first sign of things. And by the way, this is what oil was doing on that day as well. So you can imagine, the puzzling nature of that move, right? And if everyone's saying, well, this is crazy, oil's up so much, this can't be good for the economy. The fact is the market does not care that day. And that is a bit, that should raise your eyebrows. And you better pay attention to that. So a real, interesting sign. So we make it through the weekend. This is Monday, April 6th. I don't think there was much news or anything necessarily on April 6th going on that day. We're just the market's trying to figure out what in the world we're going to do here. Volumes decelerating, that makes me think, oh well, a shortable bounce, right? This is the dead cat bounce. Look at that volume dry up. Now it's we're ready to take another leg lower. Tuesday, Trump tweets this. This is where a whole civilization will die tonight. Outrageous statements, very extreme, right? Very confusing, because I don't, we're not trying to, nobody in the U.S. is saying, hey, let's bomb the entire country and, blow a civilization off the face of the earth. That's crazy. Crazy. And, but he's using the most extreme rhetoric anyone can ever say. And so we gap down, and again, we're rallying all day. Actually, I don't know if we rallied all day. I think it may have taken us a few hours to catch our footing this day. But I think by noon we were rallying into the close, and we closed at the tippy top, and there were, rumors were leaking out over time, and we closed barely green in the indexes, and wow, what another surprising day, right? We're talking about bombing these guys off the face of the earth, and then we closed green. Okay, well, interesting, and then obviously post the close, futures and the stocks continued to kind of drift higher. And by about 5 o'clock or something, there was a official report, I think, from Bloomberg. Okay, there's a ceasefire talk, or Pakistan's like trying to broker this thing, and Trump ultimately confirms it after that they are trying to broker this ceasefire deal for 14 days and try to figure out and have discussions about getting peace. So there you go. The news is out, and the market had already kind of hinted at it. With their.
Wes, let me make a point right here.
Go ahead. Yeah.
We thought the rhetoric was so outrageous. It was so ridiculous, and we knew that Trump has a propensity to tweet, and he's watching the market. He's watching the market. He's very concerned about the market, very concerned about his polls, very concerned about his numbers, and so we actually put in buy stops before the follow through day. You'll see as Wes changes the slide that we actually had a follow through day the next day. But we thought that Trump was going to do something, that he wasn't going to bomb them to oblivion. So we put an order in to buy the TQQQ and the SSO for a 17% position, and we didn't get filled. We got within cents of getting filled, but we did not get filled by the close. We missed it by just a few pennies. Yeah. And you'll see that we had follow through the next day, and so then we readdressed the situation.
Yeah, it is a great point. It's frustrating because the right idea is there, right? And maybe, and as Roy and I talked, it's like slightly armchair quarterback. We're like, well, we could have done it right when it turned green on those indexes, and we just didn't, and put in those buy stops. But right idea, and at least recognizing the change there, and nonetheless, we did get involved the next day, follow through day, a tough gap up, right? Going from uninvested. It is tough when you see it. And I think we peaked like up 3.5% on these Qs, and went as low as maybe 2.5% up on the day. And so we were sitting there watching it, didn't just chase at the open. We waited and watched things settle down a little bit. And we looked at this and thought, okay, the index is up 3%. Well, at this particular junction, like, are we going to just buy the Qs? Are we just going to buy the S&P and get some exposure? Well, we didn't think we had as much alpha potential there, right? Like, we just gapped up 3%. We thought the risk reward was going to be a little bit better in some of these individual names. So we opted to really use this follow through data to dip our toe in these individual stocks. And most of these stocks were making or at all-time highs, or near all-time highs on that day. And so that is what we were looking to buy. Of course, we had our buy list ready with a lot of stocks that were at their highs. So we were able to maneuver into these names. We call it the shotgun approach, because really out the gate, you don't really know if you don't know what's going to hold up the best. And, you just hope you can cut some laggards and feed your winners if these hold up. The next day, here's what we did. We bought a significantly more, actually. I think we added, so from 17%, we added 64% exposure there. And I say this effectively, 64%. We added TQQQ and SSO. We made those 10% positions. So, this is triple the Qs. So it's, we're calling it 30%. And SSO, we're calling this 20% because it's double the S&P. So we ended up adding a lot of index exposure, noticing the really positive action with in the market in general, holding up, not taking out that low of the follow through day. We like it when the market holds the low of that follow through day. And then this 10-day is crossing above the 21-day. For us, that's one of those key sort of short-term trend indicators. We're above the 50 still. Obviously, that's important. So we use this day to hurry up and be real decisive and increase exposure quickly. one of the things we talked about as we were, reviewing 2025 is definitely out of that follow through day. We thought we could have ramped up exposure more quickly in 2025. And so, for us, we were going to add this index exposure. And really, we've got these different levels that can act as support and force us out. So we thought, okay, well, we're going to take a big swing on the indexes, keying off the follow through day low, the 50-day, things like that would, if we failed those levels, we'd be kicked out and we wouldn't be risking a whole lot of capital. So for us, we did take a big swing in indexes to make sure that we were going to, stay in line with the market. We added, some of these are new names and some of these were, sizing up just slightly. We may have, this BWXT was probably, it was a 1% position the day before and we took it to like 2%. So most of these things are 2%. Google and Amazon they were 2.5%. Those are the mega caps. We felt very, comfortable. Just okay, 2.5%. With the idea of going to 5 on those rather quickly too. But this is what we bought that day, and how we were able to just get very long and make sure we had some make sure we were ready and flexible to not fight the narrative and not doubt Trump's deal making or whatever they're all saying. We don't care. The market doesn't care. Here we are. The market looks poised to go higher, in our opinion, from this action. The
Wes,
next
back
day.
up
Mhm,
one moment, please.
sure.
Additionally, when the 10-day crossed the 21-day, we had gone to a considerable defensive posture in our S&P model, and we used that day right there with the 10-day crossing the 21-day to increase our exposure by a third, to go from 1/3 to 2/3% long
Yeah.
at that particular time, based on that technical trigger right there.
Right. So yeah, then the next day, we drifted higher. We're comfortable at 81% or 81% long, right? Like, obviously in real, it's still now, nobody knows, what the next day is going to bring, right? But for us, we got some exposure really fast. We're real comfortable with that level, sort of waiting and watching for the most part. Some of the ideas that we were looking at, though, we did watch them. I think they may have had down days this day, Dell and Rocket Lab, so we added a little bit there. I think we took Dell to 2%, Rocket Lab 1% right here, breaking above the 50-day on that chart. We did that, so we added just a tad there, 84% long there, and then that was, by the way, this was nothing actually. That was a Thursday. And then here's this is the day. This was just 2 days ago, or this was just yesterday. Yeah. So there was news of failed negotiations with JD Vance in Pakistan. They said he went home after like 24 hours and they just couldn't find a deal and everything. And Sunday overnight, the market was down like 2% as well. So several stocks were down a lot more. The market shrugged it off, and actually you could see, the market has a way of doing this. Roy and I were looking at this too. It's just it's so sometimes the market makes it hard to execute your plan a lot of times, right? Like pre-market and overnight, there's no liquidity obviously, but we're seeing things, and I'm not so worried about this failed 1-day negotiation when we have 13 more days of negotiating or whatever it is. But yeah, we shrug it off. Bad news is ignored. On Sunday, and on Monday, we opened down. I think the market was down like 0.4% at the open, which is, nothing, right? So there was a little bit of anxiety over the weekend, but we gapped down just a little bit, and we just had a very strong day, and we closed at the highs. That's sort of a misprinted bar on this cues for some reason. We actually closed right at the highs that day, and this can be ignored. But and by the for us, for Roy and I, we were kind of looking at this. Okay, we kind of look at this as we think we're in the clear, at least for our index exposure, right? Like, okay, if we think this next leg of the bull runs on, we think we're in a good place to sit with those indexes at the very least, and then keep being opportunistic with stocks. We continue to just dip our toe in a little bit more on the long side, different setups. PL came in a little bit, I guess, when we bought a little bit more of that and Rocket Lab, and breaking above the 50, we brought it to like 2% there. And IBIT, with the possible bottom in place, right? We decided to play IBIT, sort of like the software bounce. Same kind of bottoming action that we're looking for. And it's not typical, I guess, of what we're trying to buy, but there's still it's still a reasonable trade to try for. So we took IBIT to 2.5%, and we're sitting at about 88% long. And again, that 88% long, that includes those levered index positions. And so, with that in mind, we have about 30% sitting in T-bills right now, still, ready to deploy, and 10% in actual cash ready to deploy. And, today was a really, really strong day, again, for the market. And, Roy and I were saying that the train is leaving the station. We did not make any new buys today. Most things on our watch list are extended. We'll go through a lot of what's on our watch list, and some of the strongest things are just have had monster moves the last 9 days and are just not buyable. But we do know the things we want to buy, and it's a lot of those things that are the most extended. But we can't do that. There's no reasonable, low risk entry point for any of those stocks right now. And so, what we're happy with is how long we got, getting to basically 80% long and on day 2, puts us, I think, in a decent position to be patient and wait for pullbacks and some lower risk entries on some of these stocks we own. So, or don't own. So we've got our buy list obviously is what we own, because we've got small positions. So we'll look to size up on consolidations. And then there will be plenty of new merchandise. We think we're coming into earnings season, so a lot of that will show itself over the course of the next 30 days as well.
Wes, let me interject something.
Yeah.
IBD yesterday, Investors Business Daily, they called yesterday's move where the NASDAQ was up 280 points, up 1.23%, an additional follow-through day, but it wasn't confirmed with volume. They're sort of stepping back away from the volume element that we've used for decades in terms of identifying these follow-through days. And for those of all of you that follow, IBD, remember that follow-through days are just triggers. Half of them work, half of them don't work. So it's very important to monitor the action after the follow-through day. Initially, we were very, very concerned on day 2 of the real follow-through day that occurred on the S&P 500. We were very concerned that to make sure that we didn't take out the low of the follow-through day, because the rate of failure is quite high. It's 90% or so if you take out the low of the first follow-through day. But IBD called a follow-through day yesterday based on the spirit of the market with the nice uptrend. But today we really had a significant increase in volume. That's why we're really saying the train is sort of leaving the station, because volume was up 8% in the New York and in the NASDAQ today on a significant move up in the market. So yeah, we're gonna do some work to find out, well, how many times have we had over the last 30 years? Have we had 3 out of 5 days that are follow-through days? And we're going to try to find a precedent analysis to model off of. But what we do know, it's quite bullish, and there's a tremendous amount of cash on the sideline. People they've been slow to get involved, and for the first time, we really see a plethora of what we think are new leaders that are breaking out that we've identified. We think that if the market does pull back, and it's really been in a lockout rally from the bottom, that it's going to give us a great opportunity to additionally increase some exposure and buy some stocks that we think that might double from here. So we're very excited, but we're certainly watching everything closely. But it's been a powerful move since the follow through day, and it just shows you that when the news is worse, when the market shakes off that bad news, that's really a character change in the market. And that's certainly what we're all witnessing right now.
Yes. Excellent. Yeah, so I'll go through a few more things and then we'll just kind of pull up market surge, the new market surge, and show, what's on our buy list and what we own and everything. More tidbits from Ryan Dietrich. If you guys follow him on Twitter, worth a follow. He works at Carson Research, and the point is, it's a different. There's a bunch of these out there that you can find where people are doing their analysis of, okay, we're up a bunch of days in a row. Well, we're super overbought. What next? And the fact is, it usually means more strength. So there's a number of these instances right here, and we're up. A year later, we might see 19% gains in the S&P, or that's the median, and then 14% on average. So after that, after the 7 days up in a row, and we're up 7%, I guess basically an authoritative low is in, and there's a real good chance that we continue higher from here over the next year. So these are reasons to be optimistic. There's a lot of reasons to be optimistic, I think, with the stock action, and this is just one of those interesting stats to highlight.
Wes, you made a post on Twitter, and you referenced the idea that when you don't, when you least want to buy, that's when you're going to have to buy. And so you and I were discussing that in great detail, and it didn't feel great. It didn't feel it was not easy, and it didn't feel good to buy. But you had to buy when we saw everything line up, and that's important. That's important to know. And also, it's very difficult to execute your strategy. But when you've been doing this for many years, you've got to believe in your process, and you've got to act when when everything lines up. And it certainly lined up for us, a week ago.
Yeah, totally. And I think I've only I've been doing this with you for 5 years or something, and I think I said today, it seems familiar. It's like it really gives me flashbacks to November 2023. That was a real strong thrust of a market out of a kind of nasty pullback, and then it really reminded me of April 2025 too. So it's interesting because it just feels like we keep seeing it, and it's helpful now after some repetitions and everything.
And Wes, I was noticing and taking a look at this myself when I actually was looking through some historical data. I think we had 9 straight up days in November of 23, and that's when it was a very difficult market, and it was really tough to get some traction. But from that bottom in November or December of 2023, we took our accounts up 100% to February of 2025. And so we have no idea what's going to happen. We're not making any guesses. We're just going to manage the market as we see it. But we think the opportunities are there based on the power and the momentum that the market is showing us right now. We think that some really good things can happen in the next 6 months.
Right. That's right. And some reasons why what I just would highlight. why, we're optimistic too. You have a lot of leadership groups showing themselves. These are the semis, so the semiconductor sector, probably the most important sector, right, to pay attention to. And then, the Mag 7 are still just super important for the overall market because of the, market cap of them. How these semiconductors look fantastic. They're making all-time highs. And again, I think maybe the most important sector in the world right here. So with all of these breaking out, you certainly don't want to stay too bearish or stay bearish at all. I don't think with this massive important sector making new
Wes,
highs.
I think back up one slide. I think it's important, guys, for you to understand. Look how this is the leading group in the market. Semiconductors drive everything. They're in everything.
Yeah.
They're in you just in every industry that's available in our economy that creates GDP. You've got semiconductors. But look how poorly they were looking 10 days
Yeah.
ago
Yeah.
versus where they are now. So you might
Yeah.
think that, they looked horrible 10 days ago. And that's why, we've been sitting out of the market. But in 10 days, look how the changes have taken place. So we think that we certainly want to increase some exposure here and in other leading stocks that we're monitoring. Don't think that you've missed it, because as these stocks are shaking off the bad news. So, these stocks should be bought if there's any dip opportunity that takes place. So this will just give you a visual snapshot of what's happened in the last 10 days. We think it's only just beginning.
Excellent. Yeah. And, there's a couple more groups and we'll go over them in more detail with market surge, but, obviously memory, they're back sort of in the lead with the recent stuff, recent moves below the 50, a couple of these undercutting, putting, um, looking weak and then just rallying, same thing, very, very quickly to all-time highs. SanDisk, continues to just be a monster. Somehow, just continues that run. So we're not going to fight that. We're certainly going to get positioned in the guys making all-time highs. The optical space still, again, the follow through day really making new, breaking out. We own of this. We just own GLW right now, but the one of the leading sectors, absolutely held up really, really well. Amidst that correction, right? You look at Sienna as it was, probably as the market was making those lows, it's sitting at the 21-day. Corning never broke the 50. Light never touched the 50. Really textbook kind of stuff you want to see when you're trying to, identify those leaders out of the next or out of the correction. You want to see exactly this kind of action for the new leaders. And
And
then Mag
Wes,
7.
let's give Jordy Visser a big shout out, because Jordy Visser, who's done some great work for V22 Research, he's been talking about this for the last 3 to 6 months. And he's been talking about the lack and the need for more compute for the large language models and the money flowing into AI. It's astronomical. Companies like Anthropic, where their run rate has gone from $10 billion at the end of the year to $30 billion today in only 3 months. And that's, we were wondering about, all these companies that were, the hyperscalers like Google and Amazon, it's spending, and Meta spending so much money. Were they going to be able to monetize, those capital expenditures? And they certainly seem to be doing that. So Jordy has really nailed that lack in the need for compute for the hyperscalers to build out these data centers. Because if you follow Twitter, you follow CNBC, you'll see that that's the talk that all the CEOs are having to discuss, and they're all having to implement AI to stay relevant and to stay ahead of their competition. So that's coming. You've got shortages in memory. And so you got shorted. So companies such as SanDisk and Western Digital and Storage Tech, they're Seagate, they're all able to raise their prices, and they're having to raise their prices because there's insatiable demand there. Then you've got the optical space, which increases the speed through optical transceivers and optical cables and things like that. So there's a need for speed to increase the speed, in that area. So everything is revolving around AI. We're just beginning. When I remember in the 1990s, when the internet was just getting off the ground, it took about 10 years before it was widely used across our country. You're finding the adoption rates for AI just extraordinarily high, and that's where the money is flowing, and that's where the earnings are going to represent. I saw a study yesterday where it projected that something like 36%, 36 to 40% of all S&P earnings are going to be because of AI. So we're going to have tremendous earnings. That's where the money is flowing. That's an undeniable trend that's going to drive this market higher, over the subsequent years. So it's not going to be straight up, but AI is definitely going to change our life. And finally, you're going to need more power needs to build out these data centers. So we're focusing on a number of companies that will allow the data centers to be powered. And finally, Jordy makes some very eloquent cases regarding Bitcoin and why Bitcoin is the perfect solution to what's happening with monetary policy in the market today, based on inflation and based on where the dollar is trading. So there's a lot of exciting things that are going on in the market, and everything's coming together in a choppy environment that we've had over the last 6 months. Is very, very difficult, as Wesley pointed out, to stay on the right trend, because the short-term trend is so choppy, up, down, up, down. But we found that when the trend is in a very powerful uptrend, that's when you make all your money. And we think we're just at the beginning of a very powerful uptrend that certainly can last between now and the end of the year.
All right. That's right. That's right. And the last chart or last group here, I just wanted to point out the other, potentially leading group. You need mega cap participation. That's great. These are the three, top performing mega caps. Definitely want to pay attention to them. We own a little bit of Amazon, Google. We, one of those other things, Google had a buy stop, didn't get filled on it yesterday, not quite. And then it just went without us today. But we are, just like any other thing we own, at 2.5%. We're interested in watching these things consolidate. We're not going to feel a whole lot of heat, we don't think, with things like this as they consolidate. So that's what we're gonna look for over the next couple of weeks. Good places to add the things that we already own. And again, these stocks, we'll talk about stocks from here, and we'll go through some market surge lists that we have, and go from there. So that's kind of the summary of our thoughts, and how we got through and got invested. Hopefully that is helpful. Hopefully we think we did it. I mean, I know we did a good job at this point. It's just, you never know what's going to happen from here, and we'll just respond to it, as we have to, as things change. And if we have pressure on individual stocks, we'll just get out of them. From here, it's a stock by stock basis. We're not going to lose money on our indexes, and that's just how we're gonna navigate from here. But we think there's going to be a number of opportunities ahead, just because the environment has changed, and God, we know. I mean, we know that there's going to be a lot more, and it's just a matter of time when things change on a dime in the market, and here we are. We were ready. So I'm going to share now this screen.
Yeah, Wes, it's funny how the narrative changes from where the macro narrative changed,
Yeah,
where we were worried about oil prices, we're worried about
yeah,
inflation, the impact, and we're worried
yeah,
about how oil prices are going to affect company earnings. The same way that many on the street were worried and about how tariffs were going to affect the market last year. And
yes,
it's obvious that tariffs did not derail the bull market last year. We don't
right,
think oil prices will derail the this bull market that's just starting right here. We think we think earnings will just be fine. In fact, the next 3 quarters earnings are expected to be up by a number of analysts. 19 to 20%, 19 to 21, 22% over the next 3 quarters. That's certainly an environment that doesn't make the market expensive when you're looking at forward earnings. Earnings are going to be dramatically higher this year, and we think that's the reason that the market is powering ahead here. Is the market
right,
is sniffing out that. So it's not where the market's been. It's not where what the narrative has currently been. It's what the narrative is going to be in the future. And we think that companies are going to deliver great earnings powered by productivity and AI implementation and usage and so forth.
yep, that's right. Yeah, it's just funny. It does seem like a really strong parallel to the last market, and we know it's nice when you kind of know now what the thing that everyone's going to worry about. For the most part, it seems, and there's not a clear resolution. There's not a clear answer, but it does sort of echo the tariff conundrum. All right. Well, so what? First we'll go through. We'll show you guys what we own. We kind of mentioned everything that we um, everything that we bought.
Hit the right panel over there, Wes. Yeah, the right. Yeah, there you
To
go.
show it all. You mean?
Yeah.
Yeah, this is everything we own, and it's 19 names right now, including two major indexes. We also have XBI, just with that pretty positive action. But these are all the things we own. Really, they're small, 2% positions, a lot, mostly, and just getting some traction. Things are a bit extended, but here's our list in alphabetical order.
And we'll take a snapshot of, or the viewers can take a snapshot of these to take a look. Also, go to our buy list, and this is really sort of a list of stocks that we think are potential new leaders right now, and this is where we might be buying over the next few days off of this list, certainly on pullbacks if the market gives us an opportunity. And we've got a list of 95 names that we think are the potential leaders in the market right now for one reason or another. But many of these stocks are they're near or at 52-week highs. So our 52-week high list that's really the list that we're focusing on. And what makes this market environment different from April of last year is when Wes and I were talking about this, and when the tariffs, when the Liberation Day was over and the tariff trade reversed and the market started its uptrend with that follow-through day, we didn't really have a lot. We didn't really have a lot of stocks breaking out or showing powerful action. And here, this is a totally different market. We're finding just a plethora of names of stocks that are showing themselves right now. So we think the environment is much different than last year. So we're quite enthusiastic about what we're seeing. And, we just want to make sure that we execute right. But, this is, I think you'll find this buy list very useful. So, again, these are not recommendations. These are just identifications that we've made in terms of how we screen stocks and what appear to be the stocks leading the forefront in the new bull market as the train leaves the station. So, take a look. For all these stocks, to learn more about them, you can go to their web. You can go to the company website. But we like using market search because we get to see the earnings that all these companies have, and so we can visually do our fundamental analysis, most of our fundamental analysis over just these panels that share the fundamental information that we need on the daily chart, the weekly chart, and the monthly charts. So with that, Wes, pull that up one more time. Make sure that you go down. You go down.
Yeah,
so
I
people can
scrolled.
take the snapshot. Scroll down.
I did. I scrolled through.
Okay.
I didn't. Yeah. Just to so people can go back and check out or take that snapshot of everything here. It's a great list, and 100. 100. I don't think it's not really too many, but we'll look for this to populate even further with earnings season. We don't know who's going to have great earnings reactions, but that's certainly what we're going to be looking at. Roy talks about 10-300 days. Stocks up 10% on 300% above normal volume. So I'm sure that'll be we'll populate a list of those as well. But
let me share some experience, Wes. Many of us we've built our personal wealth concentrating in just a few names. Like for, often, Wes and I, we've put, a lot of money of our personal wealth in only 4 or 5 names. So we've concentrated. And in fact, in a great bull market, like in 2020, when we had that devastating bear market, it wasn't unusual to have for me personally to have 20% positions in 8 names and be 200% on margin. But that's that's coming off of a devastating bear market, and we had many opportunities, and you had and all the stocks were working in 2020. When you're 2025 was not a market like that. When we had tariff day, when we had Liberation Day and all the tariffs, we didn't have that type of commitment. There were just not that many names that showed themselves. Here, you have many more names that are showing themselves. However, if you don't have any traction, it's best to not gamble, but incrementally increase your exposure. If this turns out to be a bull market that we expect based on the power that has taken place so far, we would expect to have 10% positions to average up in our names, because we want to move the needle, and to move the needle for us managing client accounts, a 10% position is a full position for us when the market, everything is aligning. And so we only have 2.5% positions right now, and we're going to, as we gain more and more traction, we're off to a great start. As we gain more and more traction, those positions are going to go up to 5% initially, and then you make a lot of your money at the tail end of the bull market. And at the tail end of the bull market, this run, we might, those positions might be 10%. We might prune our weeds and water our flowers, and and determine, like, these are the stocks that are these are the real dramatic leaders in the market. And so we're going to try to get, our job is to try to get a couple of those stocks, two or three or four stocks that we have a 10% position in that double. So that's the goal that we're going to hopefully achieve this year. And certainly many of the viewers, have the same, you have the same idea, but we're not starting off in a concentrated fashion because we just did not know who was going to move to the forefront and stay there. But again, after 1 week, we have a pretty good idea so far, and there's going to be more and more stocks as earnings are released that show themselves and pop up on and break out to new highs on big volume. And those are going to provide many of those stocks we're not even following now, but they're going to show themselves, when the catalyst of earnings is released and analysts have to upgrade the stocks and raise their price targets. So that's something that we can look forward to in the future. And just wanted to share with you some probably fruitful ways of managing your portfolio incrementally, but then, moving to a concentrated position, as the market improves and improves itself to us.
Yeah, that's great. And I know you sort of explaining it, but this person is talking about how are we going to add? Or that's the question. How do you add from here? Oh, and we've got different things. I mean, we certainly want to watch things consolidate. Maybe we'll see things pull back to the 21-day, or maybe today's high will prove to be a good pivot for us. So there are a couple of ways to do that. Buying actual pullbacks, or just maybe things handle from here, right? That's something we'd like to do. Roy, what do you add about any of these?
There's most of the stocks technically they're very, very strong. And, and many of these stocks, Wes is sort of going through a few of these. Many of these stocks are just going to come in to the 10 or 21 day. And, and the strongest, they're not going to even come into the 10 day. They're going to stay at the 5-day exponential moving average. So you just have to watch, let's take a look at a couple of these, Wes. So there's Marvell. So we bought Marvell. That was one of the first stocks that we bought, and we're up in the stock 20%. And we're not adding, but we just have a small position, so we haven't moved the needle. We're waiting for the 10-day to catch up to the price, and we want to, the strongest stocks, in the market, like Marvell, it's not going to go to the 21-day. It's just going to come, to the 10-day. So, we've done the fundamental work on many of these stocks, and we think that fundamentally that they're very, very strong based on their earnings projections. So every stock is going to give you a different setup. So some of the setups will be pullbacks to the 21-day. Some will just be consolidations, as the base continues to form. So there's many different ways of adding to the positions, but primarily, you can buy the stocks breaking out through pivots. You can see there's Teradyne breaking out through a pivot, and that is the type of power that you want in a new uptrend. You want to find the stocks that are breaking out on volume to new highs, and that's why we identified these stocks that Wesley is showing you and that we've actually purchased. Stocks like this, like Western Digital and Teradyne and so forth, they're just getting started. And many of these stocks, when you have a powerful breakout like this, they go up, 25 to 50%. And then, many of those runs can take place in 13 weeks between the earnings periods. So, there's going to be a number of these stocks that we own that we think are going to be up 25 to 50% in the next 13 weeks. provided that they have good earnings reports. And we think that they're going to have good earnings reports because they're in hot demand. And our fundamental work has shown that they're raising prices and they're going to increase earnings. And many of these companies are sold out through 2027. All these, the optical stocks, and we don't own any optical stocks right now. You're going to ask us about, LITE and AAOI and, Sienna and VIAV and companies like that. And so those companies are sold out. All their inventory is sold out through 2027. We're in 2026. So there's insatiable demand, as we've said, and this is going to be the thing that we think that's can take this market, much higher. But for you to beat the indexes, considerably, you're going to want you're going to get alpha from these particular stocks, we think. So the stocks that we're looking at are the stocks that are sold out, have great pricing power, have great earnings, and we're just looking at opportunities to add to them on pullbacks or breakouts after they consolidate. So hopefully that's a little bit useful for the viewership.
Yep, and sort of along that, we'll kind of keep it brief on this. Any leading stock you do not own that you were targeting for a buy, because I'll just try not to, overwhelm with. We have our buy list out there, but I know Roy, you and I talked about BE. Is that maybe the number one stock envy type of thing? But huge move on big numbers and big announcements, and triple digit earnings growth coming ahead in 2026 and 27. It looks like, and I know this is like the top of our stock envy list, and then NBIS, that massive move. There's no opportunity to really buy it unless you were, I don't know. Obviously, it was a hard thing to buy, as they are often out of follow through days, and we certainly saw it, but just we picked our 6 or 8 things or whatever, and this wasn't one of them. The strength is great here, and I don't know, Roy, are there one or two others that?
And we were talking about this, and you can go back in a lot of these corrections and bear markets, and it's very useful to find and go back and see, well, who are the biggest winners, and back in 2020 when we had COVID, you had many stocks like Peloton, you had Fastly. You had Zoom Communications. I'm trying to remember all the stocks that we bought 6 years ago that did well. Because of COVID. These stocks had tremendous earnings. We actually mentioned, I think, Tesla right west from the 2020 bottom, and Tesla was one of the biggest winners over the next 12 months from the bottom in 2020, and it was at the 200-day when it started. Now, the point that Wes and I were talking about earlier that I want to make is that you can see NBIS and Bloom Energy that was at the 200-day only 10 days ago. Look how choppy and negative the stock looked 10 days ago. Same with Bloom Energy. Bloom Energy's essentially very close to the 200-day, below all the averages. The averages in downtrends. And then it explodes moving forward. So we think that these potential stocks are, these are going to be leading stocks of this, new uptrend. It's a matter of when do you buy them. Something like a Bloom Energy, when we have power like this that's breaking out, if you get a 2 to 3 day pullback, that might be all that you get. So. We'll be watching price action in terms of how do you get on board with these, and we'll also be looking at pullbacks to moving averages. Primarily, the 10 or 21 day. All the stocks that have pulled back to the 50-day, they've already gone. They've already left the station. So you don't, right at this particular time, you don't want to buy stocks that are pulling into their 50-day moving averages. The best stocks in the market are going to only come in, they'll come back to their 10-day. So you'll just have to monitor that, on a daily basis, watching the chart. And, you might have an opportunity the 21-day, and that's it. And so use the 10-day and the 21-day on pullbacks. That's how we're going to identify what and when to buy.
Yeah, and you may agree on this Bloom Energy just because it's such a strong one. You may want to add the 5-day moving average to this chart. Keep an eye on that. In a perfect world, I would put a large position on at 200, which is just below the low of this day. That would be a perfect world. Who knows if that happens, and I would use today's low as a stop, which is like 197. You could risk like $2 and with that kind of stop and perhaps put a big position on. But yeah, so maybe the 5-day is also something to keep an eye on for these really.
And when we have breakouts like that on Bloom, we would, we think if the stock performs the way, based on the technical picture, that this stock can go to 250 to 300 over the next 13 weeks. And, that's what we're, sort of modeling. Yeah. And of course, all these stocks that we're talking about, please do your own research, because we're just sharing with you, from a transparent perspective to try to assist you and help you improve your investment results. And, be sure and conduct, great research, if you buy any of these stocks. None of these stocks are recommendations.
Absolutely. And just one more thing on this dang Bloom Energy, why it's continued to show up for us is, triple digit numbers. We talk about that all the time. What stocks can even double? The only stocks that double are the ones that have triple digit, numbers. And if they don't have triple digit numbers, the stock, the analyst estimates are just behind. But, that's something that is important to give it that kind of juice that we are looking for. So.
It's funny how, Tommy, pull up NBIS one more time, Wes. It's funny, just like Bloom Energy, we got shaken out of that stock a number of times over the last 3 months, and it's been so frustrating. And now it's finally giving you the power that necessitates, taking a really hard look at it again and adding it, to your portfolio. NBIS, it's a very interesting, company. And they signed a $17 billion deal with Microsoft over the next 5 years, I believe. And then I think a few days ago, they signed a $27 billion deal with Meta to provide all types of services in terms of providing compute and providing data centers and so forth. So these companies have tremendous visibility, and you're just waiting for the technical picture to show itself, and they just showed themselves. So there are going to be not just these stocks, but many of the stocks that we own personally, they're showing themselves right now, and it's just a matter of initiating a position by being very careful. You can also average in, these positions if you, depending on your risk profile. You don't want to come in, and initially, buy a 20% position on the pullback, and the stock doesn't hold. You want to be, again, incremental, and you want to follow, each purchase with a higher purchase that's profitable. So, don't plunge in any of these numbers. We've mentioned the 10-day and the 21-day. It doesn't mean that, we're in an environment, where you put your entire position on a pullback. We found that it's much better to buy as the stock goes up, the stock's breaking out through a pivot. So just keep that in mind to reduce your risk.
For this one, I thought it was interesting.
Great question.
We're keeping an eye on it, and we own it, and it did hold the 21 day, and I hate it. I don't like the action. It's a little annoying. Very wide bar. You can see if you don't chase these gap ups, especially in stocks like this where, it really does trick you, I guess, if you will. If you're just putting your orders in, you see, they're showing up 4% pre-market, and there's numbers of rug pulls. So just be careful when you're entering. There's always a good, it's always good practice really to wait for the first 30 minutes and see how things trade. But we're thinking the same thing, right? It held the 21. It did show that support. My thoughts are, I do want to maintain that stop at today's low and the 21 day. But one thing I don't want to do is get stopped out because it's so easy to push the stock around. It looks like there's a very good chance Roy and I would wait till the close to necessarily get stopped out. We may not have, we're not going to have a mechanical stop in there. We're going to have alerts because we'll be sitting by the screen. And we don't really want to get, stopped out just to have us reverse and close above the 21 day. Because you may, that would be very supportive action as well if we were to undercut and then, turn green and, close off the 21 day. That would be pretty normal type of supportive action too. So that's my thought, at least, is I want to honor that stop, but I do like to give it at least till the close a lot of times versus some of these intraday swings. But Roy, what do you have to say?
Yeah, what got our attention? First of all, it reported earnings, a few weeks ago, and the stock was up on an earnings beat. They reported earnings of 106%, in earnings. Revenues up 41%, and as you know, this is a hot area. The space area. We saw Amazon bought Globalstar. GSAT today, and but this is one of the first stocks that came out of the chute that broke out to new highs on the number, and that's why it hit our screen. And many times in a new market uptrend, you're going to have rotation and new leadership. As you know, SpaceX is expected to be the biggest IPO of all time. It's expected to have a valuation of $1 trillion by the time, from a valuation perspective, and it's going to be one of the hottest IPOs that we've had in years. And again, let me warn you that just you don't, when that stock comes out public, it's going to be very, very oversubscribed. And that's not a stock that you're going to want to buy on day one. You're going to want a base to form. It's got to have some type of base. And I remember buying Google in, I think, 2005. And I think that's when it broke out of its first base, if I'm not mistaken. And you're going to want a constructive base to show itself. But Planet Labs, we think the group is strong, and we think that SpaceX is going to generate a lot of activity. Whether or not, and when these stocks peak, that's a different question. But we do know Planet Labs, we bought it because of the fundamental nature and how the stock responded after on its earnings report. And you can see we had a pretty bad market, and it came in all the way to the 50-day in a bad market. Now you can see the market's consolidating here. It's been really kind of squirrely. And for just in a manner of speaking, when we talk about a pullback to the 21 EMA, many times we'll use the second consecutive low below the 21 day as our stop. So we'll try to give it we'll try to give it to the second day below the 21 day for our stop. And so, but you can see it bounced off the 21 day. We'll see how it holds. But with a big break of this 21 day, it would not. You don't want to see. You really don't want to see the stock go to 30. You want to see it hold right here. And in that same group, you've got LUNR is one that we're monitoring.
Yeah.
And you can see that this stock broke out, 2 weeks ago as well. So you're seeing some leadership in this group, and this, and it shouldn't be over. Look at the earnings estimates over there on the left panel.
Yeah.
For you can see earnings are expected to be up 89% in 2026 and 338% in 2027. So extremely strong numbers. And I actually own this one personally too, along with PL. But we ended up buying Rocket Lab because of its liquidity, Rocket Lab. And we actually bought this, as we indicated, as Wes indicated earlier, about, I think, 3 days ago. And we pressed it yesterday because it broke back above the 50-day. But this stock it's among the most liquid in the group, and that's why we took a position. PL and Lunar look much stronger, but this is the liquid leader in the group, and we'll see how it works or not. But that's why we added this.
Yeah, it's liquidity, and it's definitely the most similar to SpaceX, and I think we want to be aware of the potential top being in right when SpaceX is IPOing, if these stocks even work whatsoever. Certainly want to be aware of that as like a peak event risk or whatever. But
a lot of these stocks, Wes, they peak when you have a group move. If you've got 3 or 4 stocks in the group, like we can see that in the memory stocks and the optical stocks, and you got these, you got the space stocks. So we think that the group and the IPO is projected to come in June. So we have, you've got a couple of, you've got a pretty long runway if these stocks can get some momentum, and have some very positive action before the SpaceX. Thank you, Isaac. YSS, that's a new one. Yep.
Very interesting, and I don't know much about the numbers, but I do like an IPO that can at least be profitable, but nonetheless, very interesting. Nice to see. It's just more for the theme, right? It's more about the theme going on, and that's kind of enough, like, potentially. So
So new name. So definitely keep your eyes, because and this is the point. Look how YSS, when it came public. See, when it came public, it went, boom, it went straight down after it came public. You can see now that's, you've got somewhat of an IPO base now. So, if this stock breaks out to new highs, it's gotten through, the last 2 months, and it's shown sufficient strength to be a potential leader in the market. So the action, could be, very positive here. And it's new inventory, it's new merchandise. So that's also what makes this very interesting as well on this one.
It is, and someone mentioned this other one, another IPO in the space. I'm not familiar with it at all, actually, but nonetheless, I don't know.
Yeah, I've seen it circulate just a little bit. Again, look at the IPO price. That's what you want to avoid. Look, so if you bought that stock on the first day, the stock traded at $70 all the way to $16 before it bottomed. So that is what you've got to be careful of, because there's going to be, it's going to be just like when when CNBC used to have hats when you hit important thresholds. you can see that quote $1 trillion cap that Musk is going to be wearing, that day, and
Yeah.
that's going to
Yeah.
be a an obvious exit opportunity. If at that particular time.
That's a great point. I love that crystal ball vision, of wearing the $1 trillion man. That's all everyone's going to be talking about that day.
Yeah. Yeah.
And then, before you know it, he'll be the $700 billion man or whatever. Again.
Wes, pull up, from a thematic perspective, pull up SEI, because this is one that we identified earlier that has great, great numbers. So this is the company that does everything in the power generation and energy infrastructure area, and you can go to their site and find all about them, their website. But look at the numbers that they've achieved, over the last year. They've got the quarter that's coming out, that they're expected to report now in 13 days. Earnings are expected to be up 138%. Revenues are going to be up 45%. And you can see that you got some acceleration, over the past year. We think this is going to be necessary, and it's going to be something that Wall Street embraces. And the numbers are really good here. And you got a couple of other stocks, FPS and MWH, that are in the group. So you sort of got group confirmation. And what got us interested again was look at this, how the stock broke out to a new high, but it came back with the market. So, again, this is the kind of, when you're looking to add to something, you had a 4-day only a 4-day consolidation recently, and it sort of took out this little mini 5-day pivot today. So this is one that we bought, in the last, week or so ago, and we got confirmation with the industry. Pull up MWH, West, and we'll pull up FPS as well. So, MWH, and this is one that I actually bought. I bought as well, personally, 5 days ago, and I actually ended up selling it, after the 2-day pop, from 28 to 30 to 32 or so, but sold it 2 days ago, but it's in the same group. It's in the same group as SEI, and it's new merchandise. So it's going to be interesting to see how this consolidates in the next few days. But stocks that break out when the market's just breaking out, that's where you want to direct most of your attention. And then pull up FPS, and FPS they're in the same group as well. And you can see again, it's an IPO that has, great revenue growth. Not sure about the earnings, although on the left-hand panel over there, you can see that earnings are projected to be dramatically higher this year and next year as well. So this is a really nice mid-cap company, and that MWH just broke out. The SEI we showed you that we own, that broke out. So it would be interesting to see if this stock breaks out. But they have a huge secondary that's coming, and probably 10% of the market cap. And I'm not sure if it's been priced yet or not. I'm not exactly sure. But you've got again, you've got that group confirmation move of a new group that is perking up, just like the space stocks. That group is perking up as well.
You made that point. I think is important too. By the way, like the secondary, these the IPO bases are probably best for like very, very quick moves. Like they can move very, they can move a lot, right? They can be very volatile to the upside and be great winners, but the thing that throws a wet blanket on them is that secondary. MWH, for example, right? They just went public. The whole point was to raise money and expand the business. If they get another chance at much higher prices, that is what they're going to do. So just keep that in mind. I know sometimes I forget, but like that is, IPOs are certainly that they're looking to raise capital. So that doesn't mean they can't work. This thing broke out and looks great, but always good to be aware, like you said, of that
And when
secondary.
and when yeah, when they're younger and smaller, that's they do these add-on offerings,
Yeah,
and it's normal. Just like I think after the market today, Wolf WLF announced a secondary of 10% of their company. You can see where the stock just broke out, and that's in the they've got a great agreement with Google to provide just a number of uh, data center services with Google. So they're partnering with the right people, but they just announced a secondary to raise money after the market closed today, right when the stock makes new highs.
right.
Normally you don't buy these stocks. They come in normally 10 to 15%. There's a discount that takes place so that the people that are buying the new shares, they get in at a decent price. So a lot of times you want to wait until it's priced, till the secondary is priced before you buy it. Occasionally you can have stocks that don't come in any just because there's tremendous demand for it, but you won't know that until till the stock is priced on that
Yeah,
secondary.
right. And again, for these companies too, very, very common for these secondaries because this is how they have to expand. So Wolf, and just to touch on them more because people have asked about Iran and CoreWeave, and we talked about NBIS, being the leader and sort of our favorite because of the action, even though we don't own it. I mean, my only thoughts are that like Iran, fine, it was the leader. Can it catch up? Maybe, but I think I'd prefer to be an NBIS on a pullback versus Iran for the catch up. And same thing with CoreWeave. I I do prefer that. I love that they're all participating, but I'm still I want to keep my eye on the two at all time highs, like Roy mentioned, that Wolf and NBIS. I don't know, my 2 cents, but
Yeah, we're going to watch the optical space. They have tremendous numbers. Pull up. Oh, you got CoreWeave here. Okay. Yeah, so CoreWeave, which is interesting because they have they've got tremendous revenue growth.
yeah,
They're in bed with Nvidia in all facets,
yeah,
and it's just now showing you. You've got you've got a really nice long base there. So it's just now getting over the 200-day, and I found that if you go back and you look at a number of these, CrowdStrike comes to my attention, quickly after
hmm,
when
yeah,
CrowdStrike came public and was in a correction. It didn't get going until it got back above the 200-day, and so CoreWeave is starting to hit. From a lot of growth managers would look at this chart and buy, and they would have bought this stock 2 days ago. As the
yeah,
stock, as the base matures a little bit, it's not near its high, but it looks like it's in a stage 2 uptrend now. Above the 200-day. And the stock's up about 40% off the 30-40% off the bottom. And again, guys, when you look at these stocks that we've talked about, like NBIS and Bloom and just a number of these stocks, a lot of these stocks, it's not where the stocks have come from. If you look at the stock and say, man, wow, this stock has doubled in the last 3 weeks. Well, 3 weeks ago the market looked horrible, and it's
hmm,
not where the stocks are have done. It's where they're going. And David Ryan is famous for enunciating that and articulating that he's bought many stocks that doubled, after the stocks have gone through a correction, and he's waited until they've doubled before he's actually bought them, because it's not the first double. He's looking for the second double to take place. And this is interesting. Speaking of IPOs and SpaceX, you can see where, and this was a really, really oversubscribed IPO. See where it came public, right at the tippy top, right there.
Oh.
And so it took a month. So you didn't want to buy this stock, and that was at around what, $50 or $60 or so, that price back then.
50, yeah, 50, 60, yeah.
Okay. So it came in $30. So the time to buy this stock is back, taking out that day one IPO price right there.
Yeah.
That's the kind of move, that you would want. That's what probably is going to happen if SpaceX is going to work. It's going to spike. There's going to be tremendous oversubscription. The stocks can open it up at the high, and people are going to, people and the market's not going to be able to. It's going to be priced to a tremendous premium, and the stock more than likely is not going to hold up. Although the NASDAQ just changed some rules so that it can immediately go into the NASDAQ 100 based on its market cap and based on certain criteria. And you're going, and that's going, because it's moving to the queues quickly. That's going to give not just, it's going to give some artificial support pretty quickly. So Musk is doing everything possible to protect the downside, but you want to, you would have waited for this stock for a month before you would have bought it. And if you bought it at 50, and you can see where the stock went from 50 to 187 and just got red hot. So, anything can happen. And SpaceX, we got, several months to talk about it, but it's going to be quite fascinating.
Yeah. Definitely.
As everything is revealed.
Yep. Let's see. Another particular stock circle that we own. Yeah, I mean, our thoughts. Well, we bought it at the 50-day, or at least near the 50-day, and we like it for the crypto theme. We like the fundamentals. We like that. We like the stable coin application, which apparently just has a massive total addressable market. So we're in it. The 200-day just showed up here. I'm not going to take put too much significance on that being below the 200-day, since it's just an IPO still, where it's a new thing. And this is this one broke out a month or two ago, and then just powered ahead, and I had stock envy the whole way up, and then the snafu with the Clarity Act, and that's yet to be seen what happens, how that resolves and everything. But the action's been great. It participated in the bounce. Maybe it's been weighed on with the software correction, and then also rallied in sympathy with that IGV rally. But it was a very big mover the last 2 days, which we like. It shows there's a lot of interest in it. You see some volume coming back in, and yet we love the fundamental idea. At least I know I'm very interested in this working, and I think it's kind of inevitable that the stablecoin stuff gets adopted across the board, at financial institutions, at every company's treasury, and it's just a better instant settlement, zero fees, essentially, right? You need an internet connection, and that's it. None of this, borderless type of payments, all these things. So it's just clearly such a better solution. It feels like it has to be done, but Um, I'm a fan, small position here still. And not the typical setup that we're looking at, but to me, this action right here,
Yeah.
this breakout on earnings, huge, massive, great response, breaking above the 50, this happens, right? These IPOs, hot IPO, wow, up 10x, consolidating, and then, finding a low here, and then sort of, what changed? Well, something fundamentally changed right here. Um, and it may be the start, for us, it looks like, okay, stage 4 or whatever, sort of stage 1, and then right here, starting your stage 2 run, right? If you're looking at the state, in that Stan Weinstein stage analysis, right here looks like the very start of stage 2 and into an initial uptrend. So I'm still optimistic. I understand it had a blow there, and I had, I've been watching it. So the fundamentals have kept me aware of it, and Roy, aware of it. So I certainly like the idea. I like having a little cushion in it, off the low, and we'll see how this trades from here. But
And
like
just like just like CoreWeave, CoreWeave, if you go back and you look at that, it broke through the 200-day, like again, like 3 days ago. So if
yeah,
we get a move like that, we're going to, we want to take this up from 2% to 5%.
yeah,
So that's sort of our modus operandi. That's sort of what we're looking at. And like on Circle, you can see something happened where it moved, and that was the earnings report. Notice that it went down for like months, 9 months at a time. This actually reminds me of Meta, when Meta wasn't making money, and then they started their advertising model for the first time. Wes, pull up Meta and change the date to
what would that be?
7/25/13, 2013, 7/25, and
Yeah.
I had that written down.
Oh,
Yeah.
there you
Yeah.
go.
Okay. So I remember, and I have a number of guys. I have a number of these on my monitor because these are stocks that I bought and when I bought them. So I have these on my monitor to remind me of what was I seeing and why was I seeing it. And so you can see Meta, when Meta was oversubscribed in day one, the IPO over there at $38, and it moved and it closed below that day, when it came public. And then the stock that, no, this was the most oversubscribed IPO, Facebook, that had come out, in years. So, we've got to go back 15, this is what 13 years between this point and what's happened, in the last 13 years. So something happened, and Wesley pointed out something happened with Circle, and we think again stable coins are going to be big, and I think we saw the stable coin volume exceed the transactional volume exceeded Visa and MasterCard together from some metric, maybe so far this year or over the last few months or whatever. I saw it somewhere. And that's how big stable coins can be just from a transactional purpose. But it's come down because the banks have blocked or are blocking them from them being able to pay interest on stable coins to the purchasers. But nevertheless, they can still transact business, and and Circle is still going to make money on the float. So we think that the story is going to be even more powerful. But that's how something just changes. And then of course, if you go out a year to see what Meta did, a year later after the breakout. So that was a 10-300 day. Oh, see right there. And that's, the stock wasn't at a new high, but the stock had a 10-300. It was up 10, more than 10% in price on volume, over 300%. And something changed right there. And the stock proceeded to double, in the next, several, 7-8 months. So,
yeah, not, I won't talk too much about this. For me, I've got a little bank of this now too, perhaps. Maybe
yeah.
this is also the case where I remember where something changed.
Yep. Yep.
On the earnings, or the earnings gap here. This was a new product announcement. Same thing where hot IPO got absolutely crushed, and then finally you get a catalyst where you have these 10-300 and a bunch of volume and huge price action right here, and not exactly not as clean for sure as Meta, but it does kind of make me reminiscent of that beginning as well. Gapped above the 50-day and all that. So a lot of these IPOs will do the same thing. They're opportunistic with when they come public. I mean, huge runs. Okay, I mean, ridiculous runs to start their trading history after these IPO bases over here, right? And then it just takes them some time sometimes, and you just need the catalyst, right? Otherwise, you don't need to stick around. You just need to wait for a catalyst. And for us, Circle, it's not like we knew what it was we've been following it, sure, but it has not been top of mind, right? When the action's been so poor. But as soon as you see that, okay, you say, okay, Circle, I remember that. I know what's going on there. There's the catalyst. Pay attention.
Yeah. Yep.
And we didn't participate here. I think while the market was just weak and choppy, but keeping it in mind.
And with that, Wes, pull up Bitcoin. Pull up, and we're using IBIT, as a proxy.
It's going.
And so we bought IBIT. Was it yesterday or the day before?
Yesterday. We were watching it yesterday. It had a pretty good close, and yeah, we were buying it yesterday.
And this is an unusual buy for us as well. But you can see the stock's been in a stage 4 decline, and we see the stock going from a stage 4 decline to really sort of the beginning of a stage 1 stage. It's really still in a stage 1, but it broke back above the 50-day stock. Bitcoin looks like it's bottomed in the last 2 months. Of course, everyone knows the story, regarding the mass adoption by institutions. Keep in mind that, and Jordy Visser made the point as well. We may be in who knows what type of market environment we're going to be, but pension funds need to generate positive returns and alpha. And, this is certainly, because of the mass adoption that has taken place, it certainly leads itself to a new asset class that, that can move ahead just based on all the institutions that are endorsing and adopting, Bitcoin. Technically, we bought the stock breaking back above the 50-day, and that was coincidental with the 10-day crossing the 21-day as well. So it's really sort of an early entry tactic that we utilize to initiate the position. It's something, again, it's not it's the stock. The averages are still in downtrends. It's a very unusual purchase for us, but we think that it makes sense over the course of time to start off, and depending on what happens with the market and what happens with these stocks by the end of the year, we would like to have a 10% position as the stock breaks out to new highs to that above 70. And let me point out as well that we had, when that stock peaked at 71.82, you had that bull trap, and it failed. And, it's been in this, it's been in this downtrend for like 6 or 7 months. So nothing is a lock, just because the stocks are strong. You got to, at some point, you got to protect your downside and put your stops in. So we see this nascent turn here. So we've initiated, position here to see if we can nurture it and see what happens, as more adoption occurs and as the market improves.
And Roy, we've seen so many cycles, and it's nice when in Bitcoin, it is nice when it's not talked about, right? No, it's not really in the limelight. It's kind of forgotten over the last couple of months. I know a bunch of people just love it, but it's really not in the mainstream at this particular time. I mean, there's so much more going on, so that's always nice. You can buy this thing when people have forgotten about it to some extent. And that's
Wes,
nice.
we haven't talked really about like the engineering and construction area, like MTZ. There's a number of stocks in this area right here. And Mastech, located there in Miami. And there are a number of these stocks, and this is in the engineering and construction area. And there's a lot there's a lot of robust building, taking place across our nation, and the improvements to the power grid. We know that that's going to be important. This company is in everything from waste pollution to the build out of data centers to streets, roads, improvements, bridges, etc. You can see that this is really what you want to see, where the stock is going from the left-hand side to the right-hand side, in a nice uptrend. And you've got confirmation. Some other stocks in the group are PWR. Showing, excellent relative strength, very solid numbers. You can see the earnings are going to be, pretty significant in 2026 and 2027. Very blue chip company. And so you're getting confirmation. I bought AGX in the group personally, but it's too illiquid. That's why we bought MTZ. But same kind of action. You can see the stock reported. This stock reported earnings 2 weeks ago, broke out to a new high, and stock moved, nicely ahead. You can see it's just drifted upwards. You've got that earnings drift after the stock reported, with very strong earnings numbers, and a very thin stock with the floats very small, and it was too illiquid for us to buy, but it got got my attention. So, and again, it doesn't matter if it's a $600 stock, if it's going to $1,000 or $1,200, or a $60 stock going to $100. Just move the decimal place over. You just buy fewer shares, but it's the percentage that you make on the position, not how much you have invested in the position, that's important.
Right. We haven't really paid attention to copper or anything, but the Josephs are asking about copper.
You would think. So there's ERO. So certainly this is definitely. I'm not familiar with this one. This is a big company. I'm more familiar with SCCO and FCX. Joseph must be Mr. Joseph or Mrs. Joseph, Mr. or Mrs. Joseph, and SC. You would think that, aluminum has done much better if you take a look at AA, but you would think that copper would. Copper is used in everything. It's used in EVs. It's used in these data centers as well. you would think that you would that they would be performing better. But maybe you just got a little rotation, the way you've had a rotation out of leadership, like the gold stocks,
Yeah.
as well. So, aluminum and silver, silver presumably is utilized, even more than copper from an industrial perspective. But, you can see what, silver blew off, to the upside. And, when you have parabolic moves like that, rarely it takes a while, sometimes, years to come back and make a 52-week high. But I guess from the technical perspective, you just had a blow off move. So even if, silver demand, increases, and there was a lot of talk of them of having a silver shortage in EVs, and so consequently you got that blow off move, parabolic move to the upside. But silver and copper are sort of lagging, just like gold, went through that correction,
Yeah.
as well. So there's that blow off simultaneously with the silver blow off. But gold looks a little bit better than silver does. But you would expect, as the economy to continue to grow, you would expect for copper to improve. But apparently, aluminum. I think aluminum also is. I think in the Middle East they provide quite a bit of aluminum, and you got a shortage there based on the strait being shut off. I think CNX is another one in the aluminum area. I think that's because of the strait.
See.
Oh, we haven't. Yeah, let me just touch, and we're gonna shut it down here momentarily. We've been on for 2 hours, but let me also mention Wes and if you follow us on Twitter, you can see that we have mentioned. Oh yeah, this ONTO looks. Yeah, that's something that just popped up just a few days ago. You need to change the date on it though, Wes.
Oh, okay, interesting. Yeah, that's what's
So
going on.
you've got a few of these that actually look great, and we really haven't followed. And I have noticed in the last 4 or 5 days this ONTO is breaking out. So that certainly looks good. ACLS in the semiconductor area, we haven't talked about that, but that's got leadership action. And so you can see, we're seeing just a number of these stocks. We didn't have this in the beginning of the bull market in 2025. So we're quite enthusiastic about, as you can tell, about the opportunities that are going to reveal themselves to us. Oh, and let me close with 3 things I wanted to mention. We do think that energy that has lagged, that's been a small portion of the S&P, and I think it's about a 4% position in the S&P industry groups, and it's it's 3.5. It's probably 3.5% now. It's averaged 19% over the last 20 years. Not averaged 19%. It's been as high as 19%, and I think it's averaged like 9% or so, over the last like 30 years. And so we think that you're going to have tremendous earnings power. We don't think oils can go back to $67, $65, $67 anytime soon. But if I think WTI was $93 today, but we think that oil might come in to 77, 80, $87. Over the next, but sort of that's what it's showing based on futures for the rest of the year. If that takes place, you're still going to have tremendous earnings power in energy stocks. There are many energy stocks that are traded publicly, but we think the 3 different ways of playing it is XLE, XLE is one, and if you take the parallel that Wes and I were looking at is if you go back and you look and just jot a note down. If you go back and look at gold in a couple of years, 2023, when gold broke out, and Wes, can you pull up the weekly on that, weekly or monthly?
Sure.
Weekly. Pull up the
Here's
monthly and.
Oh gosh. Here's weekly. It looks a little funky to me though, which I don't love. So we're gonna do. What do you want to see exactly?
Monthly. Yeah, the monthly. Yeah. Okay. So that's what I want to show. And there's the breakout right there where Wesley's pointing to.
March
And so,
2024.
so there's the breakout, and that was a 10-year breakout.
Yeah.
2010 to 10, 11-year
13.
breakout right there.
Yeah.
At 200. And we saw it. We just thought that it was, sort of a slow way of playing. But you can see over the next 2 years, it went from 200 to over 400, 200, 450 over the next 2 years until recently it peaked. That's the analogy. Now pull up XLE, Wes, and let's go back, look at the monthly currently on XLE. And we want to get involved here. Look at this breakout that just took place 3 months ago. That's essentially, what's that? 15 since 2006. That's a 20-year breakout, essentially.
Uh-huh.
And so we think that this is just poking its head, just like gold did. And gold, you had, when you go back and look at that gold trade that we just profiled, gold came down maybe a month or something like that. But we think that, as more and more money, as earnings continue to come in the energy complex, that we can certainly see where something like this may double, go up from, 60 to 150 in the next 2 years. So this is something that we're interested in buying. And we didn't show you the daily, but go back and study the daily on your own, folks. Yeah. And if you look at the daily, it got a little bit messy on when breaking the 50-day, and we're seeing this. Yeah. This is, we would normally not buy something breaking the 50-day, but just our work is, it's showing us that we, if oil comes down, if we've got a solution in the Middle East and so forth, this may come back down to 52, 53, something like that. But we think that that'll provide an opportunity to buy for long-term accounts. And we normally we're so concerned about the short term that we miss the long-term great plays like the gold plays. So we think that XLE, OIH, and XOP are the three easy ways to, I don't know if it's going to be easy, but we think those are three of the most legitimate ways where you can buy the ETF and still get a bang for your buck and not have that individual company risk. So, XLE, XOP, and OIH are the three ways to do that. So, Wes, we've been going on for over 2 hours. So, folks, viewers, we want to thank you for tuning in with us. We hope that it was instructional, informational for you. And we wish you continued trading success, investment success as you manage your own portfolios. If you're interested in us managing a portion of your dollars or all of your dollars for that matter, you might contact us on our information sheet that Wesley showed earlier. And with that, we'll conclude the meeting tonight and look forward to seeing you all next month, the second Tuesday, again at 7 p.m. Good night.
All right, thanks.